Welcome to Espresso Jams, short, concentrated, delicious conversations about business, life, and more. And now, here's your host, Joe Matz.
Hello, welcome to another episode of Espresso Jams. Today, I have Aradhana Aggarwal with us, and she is a business owner. She is a CPA, small business and tax expert. Welcome to the show.
Thank you, Joe. Thank you for having me.
Yeah, so we met a short time ago and we got talking about small business and all the changes that have been going on and happening in small business. Last year was obviously different than many other years previously. Perhaps it's one of the most unique years in our lifetime with the COVID virus. And business has changed, and that's going to affect your taxes, isn't it?
It does. And what happens, a lot of small businesses, they don't know what deductions they should take or the deductions that they should not take, and the ones that they should take, how to do it, what kind of documentation they need. So I will go over some of them, Joe. We have limited time today, but I'll go over a few of them. So one is business meal deductions. So people don't know how much deductions they can take, especially small business owners. So starting from 2018, under TCJ Act, only 50% of the business meal deductions were tax deductible. So
does that mean if I go out and I get a $35 steak, I can only deduct $17.50?
Absolutely. So that's what it was until 20. So now starting with Taxpayer Certainty and Disaster Tax Relief Act of 2020, so they made some changes and they relaxed that requirement. And now for 21 and 22, it's 100% deductible. So now if in 2021 you go out, you can deduct 100% of your expenses. But remember, you have to document name of the guest, date and location of the meal, business relationship of the person that you dined with, and the total cost of the meal. So
if I have a beer, can I drink a beer and deduct that?
You can document it.
Okay, very good. So that's changing. That's interesting. What other changes do we have that we need to pay attention to?
So there is this PPP loan, and a lot of small business owners, because they received the PPP loan last year, they don't realize that they are eligible for the second round of PPP loan. And one more thing that happened this week, that SBA has established a 14-day exclusive PPP loan application period for small businesses and nonprofits with fewer than 20 employees. So what it means is that for next, like starting from this past Wednesday, for the 14 days window, they will process only the PPP applications for the small businesses that have fewer than 20 employees. And then they relaxed a lot of requirements for them. And the loan is going to be based on the gross income rather than the wages that it used to be. So there are a lot of changes for small businesses. SBA is trying to help small businesses.
So let's put some dates on that. You said last Wednesday, which would have been February 24th?
Yes.
2001. And then 2 weeks from that date, exclusively for small businesses, less than 20 employees.
Yes, sir.
That's awesome. That's awesome. And people listening here, they can contact you if they want more information about that, right?
Absolutely. They can contact directly, yes.
We'll have your contact information later in the show. Great. Okay, let's talk about deductions, because I like saving money on taxes. I think everyone does.
Sure. And then especially for the small businesses, a lot of small businesses, they don't have a specific outside office for their business. And sometimes they operate from their home and they can deduct those home office expenses. But the question is how to do that. People just don't realize. So there are two ways to do it. So one is the actual expense method, and the expenses get prorated based on the square footage used for the home office. And then you can deduct your maintenance, electricity, depreciation, insurance, real property taxes, mortgage interest, and other direct expenses related to that home office that you use for business. But then to simplify it, because sometimes it gets too complicated, And to simplify it, you can take a deduction of $5 per square footage up to a maximum of 300 square feet. So basically a maximum of $1,500 per year. You can take deductions by simplified method. So you don't have to kind of, use all those expenses and have that breakdown of mortgage interest, real estate taxes, depreciation, and all those costs. And then you just go by with one number.
Just keep it simple, right?
Keep it simple.
And I would imagine in many cases it's better and easier, and there's not much difference in how much you get.
Exactly, yes.
So what about, I bought a microphone. Can you see isn't that nice?
I can see it, yeah.
I love it.
Cool.
Can I deduct my microphone?
You can, if you're using it for business.
Okay, good.
So yes, so it depends. And if you're using this microphone for other things too, let's say, you're using it to, send messages to somebody else for personal uses and all that. So you have to really see, is it strictly used for business, or is it a mixed use of business and personal? And when it comes to business and personal, that's where you can take the prorated expenses. And for some of the expenses, let's say phone and internet and all those other expenses, where it's very difficult to pinpoint, okay, this is for business. You're not going to keep you are not going to take your, let's say, electricity bill or phone bill and then kind of just mark, okay, this is my business call, this is my personal call. It gets too much. But then let's say roughly you think that you are using your phone 50% for the business, then you should be able to take that 50% of your total cost of your phone as business expenses. But do make sure that you have some kind of good judgment on what percentage of that expense you're using for business.
Right. Good judgment. And I think what I've heard in the past is be reasonable.
Be reasonable, exactly.
Don't say your car is 100% business because you take your family to the park, right?
Absolutely. And that's where it gets really complicated, like for small businesses where they don't have a car exclusively used for business. And for talking about the car expenses, the same thing, you can take either mileage reimbursement, or you can take the prorated expenses that you use for business. So again, let's say if you went somewhere only for business, you can deduct those expenses, the gas, you can take the prorated expenses for insurance, but you can take a simplified way too to deduct those expenses. So for 2021, the mileage reimbursement rate is 56 cents per mile. So you can take that, and then you don't have to worry about all the things that you have to account for. But you still have to account for the mileages, where you went.
Well, that's how I do it. And I use a program on my phone. It's an app, and it tracks my mileage. And then I can categorize it as business or personal. And if it's business, I can actually put what I did during that time.
Exactly. So you have to document all of that, but then you can, and then one mistake that usually I have seen what people make, they think that they can take the mileage reimbursement and they can also deduct all the actual expenses like depreciation, repair, gas, and all those. No, it's double dipping. So you can
call that double dipping. Yeah.
Yep.
Don't do that. No.
Don't do that. You can take either or.
Aradhana, this is so great. And there's so much more information that people can learn by talking with you. And it's just been fun talking with you. What would be a quick takeaway or an action step for our listeners today?
Sure. So before I get into that, I just wanted to mention a couple of more deductions that small businesses can take. And so one is medical expenses. So their medical insurance and their medical, the health insurance cost, and also the healthcare expenses, they can deduct those. The retirement contributions, they can deduct those, and any startup expenses up to $5,000, they can deduct those. So, and now about the takeaways, I would say everybody's situation is different. And then a lot has happened in the past year. There have been a lot of changes in the tax laws. I would say always talk to your tax advisor to see how to maximize your deductions and how to be compliant. Because when it comes to small businesses, they are so busy in business development and doing, wearing so many hats that they always forget, or they don't know what to do when it comes to compliance and tax deductions. Always talk to your CPA.
Sure. Okay. Very good. Very good advice. And how could someone get in touch with you if they want to know more and talk?
Sure. So they can call me at 919-670-5425. They can visit my website, www.aradhanaagarwalcpa.com, or they can email me at info@aradhanaagarwalcpa.com.
Super. And we'll have all that written down. Very good. Well, thank you very much. It's been great talking with you.
Thank you, Joe. Thank you for having me.
Bye-bye.